Now that we have covered what an IPO is and why companies go for an IPO, let's talk about the different terms that you might face when you invest in an IPO. Now, we assure you that after this, you'll be much more comfortable when you look at the next IPO. Now, let's look at some key IPO terms, and I'm going to take a help of an example, which was Burger King IPO. Now, just look at this table. We have an IPO opening date, which is December 2nd, IPO closing date, that's December 4th, an IPO price, that is 59 to 60 rupees per share. Then we have something known as a market lot, which was 250 shares. Listing date, which was December 14, 2020. Listing price, the price at which it is listed is 135 rupees per share. Issue size, the size of the IPO, which is 810 crores. Fresh issue means new issue of 450 crores. Offer for sale, 360 crores. Now, let's look at some of the important terms. What is IPO opening and closing date? Now, IPO opening date is the date at which you can start applying for the IPO. The IPO closing date is the last date at which you can apply for an IPO. Now, in case of Burger King IPO, the IPO opened on December 2nd, 2020 and closed on December 4th, 2020. So you could apply in this time. Now, what is listing date? Now, this is the date on which the company gets listed on the stock exchange. Now, on this date, the shares of the company are traded on the stock exchange. Burger King got listed on the stock exchange on 14 December 2020. Next, we look at price band of an IPO. Now, a price band is the lower and the upper limit of an IPO. Now, in our example, we saw 59 to 60 rupees per share is the price band of the IPO. Now, here 59 rupees is the minimum price at which investors can bid for the shares. And the price is called the floor price, minimum bid. Now, similarly, the maximum bid which investors can bid for is the cap price. It's called the cap price of an IPO. Now, in this case, in the Burger King IPO, the cap price is 60 rupees per share. Next, there is something called as a cutoff price. The cutoff price is the price at which shares get issued to the investors. Now, it is the offered price finalized by the company along with their investment banks, and it could be any price in that price band. Now, we covered the cutoff price in detail in the previous video. The cutoff price for Burger King was 60 rupees per share. Lot size. Now, when you apply for an IPO, you can bid for any number of shares that you want. You have to buy lots. Now, in the case of Burger King, one lot was 250 shares. Now, you can buy 1 lot, 2 lots or even 3 lots, meaning you have to bid 250 shares, 500 shares or 750 shares. Now, generally a lot size is designed so you have to invest around 15,000 rupees for 1 lot. Then we come to listing price. As you know by now, the listing date is the date on which the stock gets listed on the stock exchange. Now, after getting listed on the stock exchange, the price at which the stock opens on the stock market is called the listing price. Now, in the case of Burger King, the stock got listed at 135 rupees per share. Now, you can see that the IPO price band was 59-60 rupees, but the stock got listed at 135 rupees. Hence, someone would have actually sold his shares at 135 as soon as the stock market opened on 14 December 2020, and he would have made a return of 125% on the listing day. And this phenomenon is called listing gains. Issue size. Now, issue size is the total value of all the shares being offered in this IPO. Now, in the case of Burger King, the issue size was 810 crores. This means that the shares worth 810 crores are offered in this IPO. Now, next we'll look at fresh issue and offer for sale. Now, when a company goes for an IPO, it offers fresh shares in order to raise capital. They may use this capital to fund new projects, expand their business, or maybe reduce their debt. Now, this part of the IPO is called a fresh issue. Now, an offer for sale is when an existing shareholder sells his shares so that he can get return on investment. Now, no new shares are issued in the process and the money does not go to the company but goes to the existing shareholder's pocket. Now, it's a way for existing shareholders of the company to exit and earn some money in their investment because they would have invested in an early stage of this company. Now, out of the Burger King's IPO issue of 810 crores, 450 crores was fresh issue and 360 crores was offer for sale. Red herring prospectus or RHP. Now, you would have seen this. A red herring prospectus is basically a document that informs investors about the entire company. Now, the document is very useful to investors because it provides detailed information about the company's business operations, financials, promoters, and the company's objective for raising funds. It also informs the investors about the potential risks of investing in this IPO as well. Now, in the RHP document, Burger King basically said that they intended to raise this capital to open new restaurants. Now, it shared the financials, detailed about its last performance, the future outlook of the business, and everything was there in that document. Now, Burger King also shared details about the outstanding criminal and legal cases against both the company and the director as well. Grey market price. Now, if you have tracked an IPO, you often come across this term grey market price. But what is a grey market? A grey market is a market where shares of a company are bought and sold outside the official trading channels. Since it's unofficial, there are no regulations around it. All transactions here are done in cash, and unlike other transactions on the exchange, there are no stock exchange or a broker to back this particular transaction. Now, in a grey market, shares are traded before they even get listed on the stock exchange. The price at which the shares are traded on the grey market gives investors an idea of what the listing price will be for that IPO. However, don't take this as an accurate number because this is not always very accurate. Now, to conclude, when you invest in an IPO as a retail investor, are you the only one applying for the IPO? Obviously not, right? Now, in the next video, we'll discuss what are the different types of investors who participate in a particular IPO.